Hey, Zach Stein again, co-founder of Carbon Collective. Welcome to Chapter 2 of the Ultimate Guide to Sustainable Investing. In the past chapter, we talked about at the high level, why is investing so critical as a lens to look at for solving climate change? We cannot solve climate change without dramatically winding up investments in climate solutions and dramatically winding down investments in fossil fuels. So that's at that high level, but you're an individual. You maybe have a retirement fund, you maybe have a brokerage account, you maybe have a 401k at work. How should you think about what is the impact of your investments in this space with this? How is your decisions on where to invest? How does this fit into that broader chapter? This is the question that we are looking to answer in this chapter here. There are three ways that as individuals, buying and holding shares on publicly traded markets have impact. They have impact in that they can help a company's or hurt a company's cost of capital. When we buy and hold shares of a company, particularly in a retirement account, we reduce the supply of shares that are actively traded on the market. For a company that has a reduced supply of shares, when demand goes up, it pushes that price even higher, which can help them with their cost of capital. More detail in the article, check it out. We use a pretty fun analogy about sneakerheads. The second here is narrative. Companies, there is ongoing narratives that investing in sustainable funds or investing in a sustainable manner is somehow charitable, that you are giving up on potential returns. That has just not proven to be the case, particularly over the last 30 years. I was born in 1989. From investing, if you invest in the S&P 500, without fossil fuels, without energy over that time, from then until now, you would have made more money than just investing in the S&P 500. The time of fossil fuels being a critical part of a portfolio, we believe, is over, and we argue in this piece. And then the final part that we touch on here, which is starting to happen a lot more, is the crucial piece of voting. When you own a share of a publicly traded company, you own the right to vote on those companies' critical decisions. You also own the right to propose a shareholder resolution on this. This is something that has just begun, but so far in the climate community, it is often focused on trying to get fossil fuel companies to voluntarily reduce supply. We don't believe that's the most effective strategy of what we can leverage. Instead, we should focus on companies trying to get them to reduce their demand on fossil fuels and focus on that side of the equation. A lot more in this piece. We have some strong opinions in it, and we think that you'll find it really useful. Let's dig in.